Alright, so we're going to go to BTC Bitfinex. By the way, I recorded the audio after I did this video. Bitfinex goes way back. So we can see the very first bull run back in 2014, at least on this chart, and our most recent bull run. Now putting this in log scale, because this is important, this kind of helps, it's going to help us show the percentage, and you get a better visual of how much it went up and how much it came down. So this is our first bull run. I'm getting it to where it takes up a lot of the screen, but it's just about right. Let's scale it up a bit. I'm going to copy this and paste this into Photoshop, and then I'm going to paste the most recent bull run. I'm going to overlay the two, and we're going to scale it and make it match. So I'm pasting this first bull run in. I got two monitors going, so I'm cropping it so you can just see one. And now we're going to go to our most recent bull run and zoom it in and get it just right. Now everybody's talking about backed and institutional money, and everybody's going to FOMO and want to jump in, and it's just going to skyrocket. But what people understand is institutional money is there. The only way they make money is by you losing money. And everybody's getting so excited. We're getting to the end of this triangle, and when we do, we're going to just go skyrocket right to the moon. So here I've pasted our most recent bull run. I'm going to copy it, and I'm going to paste it over our first bull run in 2014. It's 2017 bull run over 2014 bull run. And I'm making multiply so you can actually see each graph over top of each other. Now I'm going to scale this, starting with the top first two peaks, trying to get them to match up. And you can already see how similar this is just without really editing it. And what I'm going to do is match the first two peaks, and then I'm going to cut it at where those peaks meet up, and then keep scaling it from left to right until we get to the point where we're currently at. And that looks about right. So I'm going to cut at the top of this peak. And we're going to paste it right in place where we left it, where we cut it out. Make it where you can see it over the layer, which I'll have to keep doing this for each one. Now we're going to scale this to where it matches up. And that looks pretty close. So we're pretty much going with the bottom and the tops of these peaks. And that looks like that lines up pretty well. You notice how that the first bull run, it went more sideways and then went down. Our most recent bull run, it was a sharper decline. It came straight down and then came up. But as you'll notice, when it starts and ends, it's almost identical. So I'm going to cut this out, paste it back in place, and scale it to where it matches. So now you can really see how well that one rally matches the other rally, with the exception of it dropped down in the center there. So cut at the bottom of the peak, paste it back in, and scale this one. And you can see it matches up pretty nicely. So looking at this, matching everything up, which you have to be crazy if you don't think that matches up really nicely. That puts us right there, right at this red mark. And you see what happens after that red mark. And we all know we're in this descending triangle that we've been in for the past, almost a year. And you can draw the line. People draw it different ways. But basically, we know this pendant is getting narrower and narrower, and eventually something's going to happen. Everybody thinks it's going to break to the upside. I'm telling you, it's going to be breaking to the downside based on our previous bull run and seeing this pattern overlaid. So if we go to our first bull run back here, and now that we've kind of shown where we currently are, and this is in log scale, this is the point we're at. You see how much it drops down. Now look at when we measure the percentage of that drop. Let's say that that's our bottom, and there's less volatility. We're starting to bottom out, right? It's starting to level. So you get to the end of this triangle. How much do we drop? Well, just to the meat of the candle, let's just call it 50%. So let's see how much a 50% drop is in our most current location. So if this is our bottom right now, we come down 50%-ish, that brings us down in the 3,000 range. So I'm telling you, do not FOMO in. All this news you're hearing about backed and everything else, institutional, they want to make money, so you're going to have to lose some money for them to make money. They want to buy in cheap. It's going to go down, up and down, and eventually our bull run's going to start. I mean, look how many days were between when it finally, and I call this capitulation, this point here where it drops, but look how many days that took before we started our next trajectory going up. That was 255 days. So I think this one's a little more compact. It could be less than 255 days, but just to give you an idea. I mean, look how far we have to go before our next bull run starts. I mean, just, what, 240 days, maybe 200 days, maybe a little less. That's still a long time. But we're going to be trading down in that area. So pretty much, we're going to come down, and then go up and down, and then eventually we slowly start our bull run until we go parabolic. So that's what I see happening, and I think we're getting to that point where it's about to drop. So be careful before you decide to buy in. I think a lot of people are going to be really upset. They're going to lose a lot of money. They're going to lose half of what they have invested right now. So just wait it out. Wait it out a few more weeks, however long it takes to get to that bottom point, and then buy in. We've got one more drop coming. And you can see how well all this matches up. But yeah, I wouldn't gamble and buy in right now. People say we're at the bottom, buy in, you're going to miss out, and bullshit. We still got 50% we're going to drop. So anyways, just want to share that with you. Happy trading, good luck, be smart.